G'day guys, Aussie Share Trader back for the last day of the month, last day of April. So we'll look back at how April went and then we will look forward to May and see if we can pick a few winners. Stick around. G'day guys, hope you're all doing well. Okay, so April, maybe a slightly better month than what we've had the last few months. It was still a little bit choppy, probably what you would call unexciting, I would say. It's not a fantastic market to be trading in at the moment. Not a lot going on, so a little bit boring from my point of view. We'll look back how the three went from April. Now the first one was OZL, Oz Minerals. Last day of last month it was $8.95. Right now it is $9.05, so up 10 cents, a bit over 1%. Let's not call that one a winner. That one's just sort of hanging in there. It did go up to $9.45 during the month. I hung on because there just wasn't enough there for me to sell. I wanted a bit more, but now it's come back down to around the $9 mark, $9.05. So not a winner, not a loser. I'm in this one. I'm going to hang in there for another month or two just to see how this one goes. The second one was RWC. Now that had a slightly better month. That was $4.44 this time last month. Now $4.74, so up 30 cents. What's that, around 6-7%, somewhere around there. They're going okay. They were pretty flat for the first half of the month, but the last couple of weeks they've started to put on a few percent. So they hit a high of $4.80, that's about where they are now, so they're going okay. I'm happy enough with that trade. It's been just a very gentle sort of upward momentum the last few weeks, so I'll hang in there on that one for the time being. I'll probably look at getting out of these around the $4.90, $4.95 mark. And the third one was the little Aussie battler TGA, which is Thorn Group. They were 65 cents on the last day of last month. They're now 62, and that's after having a reasonably good day today. So not a good one at the moment. Look, again, I'm hanging in on these. My average price on these is 66 cents, so I'm down at the moment. But all is not lost. I'm going to hang in on these ones for at least another month, unless something drastic happens where I do have to sell. But they're okay, so I'm going to just see how we go with those ones as well. So that's the three from last month. One not much, one good, and one not so good. But anyway, let's look forward to May, and I have three more for this month, and they are three that I've never spoken about on this channel before. Okay, so the first one is BKL, which is Blackmores. We'll have a look at the business summary. Blackmores Limited is engaged in development and sales and marketing of health products for humans and animals. Its products include vitamins, herbal and mineral nutritional supplements. Products are distributed through retail pharmacies, supermarkets, health food stores, mass merchants and distributors. BKL operates in Australia, New Zealand and Asia. Okay, now these ones have had a pretty tough year. They started the year around about the $170 a share, and now they're around about, last time I looked, they're $117.80 with a low of $116.01. So the market cap right now is just over $2 billion and the PE is just under 30. Now there's a few reasons that it has come down this year. First was their half-yearly report, which came out in February. The market didn't like it. They're expecting this to be a high growth company, and while the report was okay, it wasn't great. So the market did pound them a bit at the time, down from around $160 a share down to around $120, somewhere around there. Fairly quickly. So that's one of the reasons it hasn't gone well this year. Another reason I think is the tension between America and China with this potential trade war that's going on. Anything to do with China at the moment is suffering, and Blackmores is part of that. So that could be another reason while the shares, a bit of uncertainty about that market in China, because China is very important to Blackmores. It makes up around 40% of their earnings, so they can't afford to be losing that. Their balance sheet looks okay. They have around $100 million of unsecured debt, but for a company this size, that is not a lot. I guess they have quite good expectations from the market So when they aren't met, then they can suffer a little bit. So, and right now, there's just a few nerves around Blackmores. But I really think at $117.80 last time I looked, that they're a fair enough buy at this price. They're a little bit risky. If things go south between America and China, then these will go with it. If not, if things start to look positive, these could rebound and rebound pretty hard. So anyway, I'm going to be in. I had my buying at $116. It didn't quite get there, but I may readjust that over the next few days. And I'm going to buy these, I'm pretty sure, within the next few days. So have a look at them yourself. Do your own research, of course. BKL, which is Blackmores. Okay, now the second one I'm going to get you to look at for May is DLX, which is Dulux Group Limited. Let's just take a quick look at the business summary. Dulux Group Limited is engaged in manufacturing, marketing, selling and distribution of branded paint, coatings, adhesives, garden care and other building products to the residential, home improvement, commercial and infrastructure markets across Australia, New Zealand, Papua New Guinea, China and Southeast Asia. DLX operates mainly in paints and coatings, Australia, New Zealand, consumer and construction products, garage doors and openers, cabinet hardware and architectural hardware and other business segments. They're currently at $7.73. They're one of these weird companies that reports their year ends at the end of September. So their annual report come out in, must have been in November last year. And look, it all looks quite nice for this little business. They have some really well-known Aussie brands in Sally's, Cabot's, Yates and British Paints, and so they're a household name, Dulux, without a lot of people knowing it. One thing that may be putting a little bit of downward pressure on these shares is the fact that the real estate market, especially in Sydney and Melbourne, has peaked and is starting to come back a little bit. In my opinion, that doesn't make a lot of difference to a company like Dulux, because whether it's new construction or renovation or just people tidying up their house, there's always people spending money on their houses. So that side of it doesn't worry me. A bit like Blackmores, they do have business in China, so there may be some worries around China at the moment. If they lose that, then that will hurt them, obviously. They have revenues of 1.8 billion last year, net profit after tax of 143 million. I think they're definitely worth a look at these prices. You'll see on the chart that they have actually had a little bit of a run the last couple of weeks, but even at $7.73, I think they're definitely worth a look. So put them on your watch list and check out Dulux, DLX. Okay, so I've given you two pretty solid companies to look out in Blackmores and Dulux. Now the third one, as is my way, I'm going to give you one a little bit more speculative. And to be honest, I don't know a lot about this business, and I want a bit of feedback from anyone out there who does. It is Archer Exploration. Their code is AXE. I'll read their business summary. Archer Exploration Limited is a copper, gold and uranium explorer with exploration focus on licenses in South Australia covering an area in excess of 10,500 square kilometres. The company's immediate focus is on graphite. Now that's the part I want to see if I can get a bit of feedback from people out there around graphite and graphene. That's what they're looking at the moment. They have two tenements in South Australia, which is something that is interesting because a lot of the graphite seems to be in countries where there is sovereign risk, whereas Archer Exploration is looking exclusively in Australia, and it has, like I say, two what look like very healthy graphite deposits. Again, I'm not sure on the technology behind the graphite and graphene, whether it has some long-term use in batteries such as what lithium has. But if there's anyone out there with more knowledge than me, I would be really interested to hear it. They're only a very small company, no revenue at the moment, $25 million market cap. But graphene is the thing. I've been reading and watching a few YouTube videos about graphene, and it looks to be fairly exciting. But again, it's been around for a long time, so why hasn't it taken off before now? Is it just all just froth and bubbles? I'm not sure. So anyway, have a look at Archer, and I would love to get your feedback. I did buy some of these just on a whim at about 11 cents. at exactly 11 cents, maybe 2 or 3 months ago, I think. They're currently 14.5. Now, that could be cheap, it could be expensive, but yeah, please have a look at Archer and let me know your thoughts. Okay, so that's it for today, guys. So the three were BLK, which is BKL, sorry, which is Blackmores. The second one was Dulux, DLX, and the third one is Archer Resources, which is AXE, really cool code of AXE. Okay, so what we're going to do now is give away a $100 Bunnings voucher for the Australia's Greatest Stock Picker competition. So let's go to the screen and we'll see who is going to win the first $100 voucher. Okay, so today we give away the first of the $100 Bunnings vouchers, and we'll start with the ladder today, and we'll just work our way up to the top of the ladder, and then we'll go back and look at the other screen to see what shares the winner has got. Okay, remember this is just the first $100 voucher. I'll be giving away another $100 voucher for whoever's on top next month, and also a $300 voucher for whoever is on top at the end of the competition at the end of June. So here we go. Kevin Young, unfortunately you're still on the bottom there, young man, down 21%. Let's head up. You can see how you're going as we move up the ladder. So 45, Ant Carnage, first one into the green. Keep moving up. So I'm going a bit fast. If you need to pause it to check where you're at, you can do that. Okay, keep moving up. Mark Williams at 6. Stephen Driscoll, formerly Delta 4000, is at 5. Lakshan Ranatunga is at 4. Jordan de Bortelli is at number 3. And I'll show you that. The winner is Amy Chan. Don't worry about that joker on the top there. He's ineligible. So the winner of the first $100 voucher is Amy Chan, up 16.157%. So well done, Amy. If you want to send me an email to the address on the screen, I will get that $100 voucher to you. I just need a postal address somewhere I can send it to, because it is a physical card that I need to send. Okay, so well done, Amy, the first winner. If we go back here, we'll have a quick look at what Amy had. She does have CLA, I think it's Celsius Resources. They're actually down about 10% today, but they're still up 33% over the month, so they had a very good month. CSR, which were up 7.5%, and also APX, which were again down today, but overall for the month up 7.7%. So 3 really good quality stocks there from Amy, and I'm sure she will be hard to beat in the whole competition. Okay, so that's it, guys. Congratulations, Amy, for being our first winner. And let's go back to Darren. Well, there we go. What an exciting competition it is. Remember, that's just the first of the vouchers that I'm going to be giving away. There's another $100 voucher at the end of next month. And at the end of June, the last trading day of June, I will be giving away a $300 voucher for whoever's on top. So there's not much you can do if you put your companies in. You just have to sit back and wait. But hopefully, if you're not doing well at the moment, your businesses turn it around. You can get up there for next month. Okay, so that is it, guys, for this video. I have got a lot of things going on in my life at the moment. You may remember I've sold my business a few months back, and I am right at the moment. I'm a lot quieter. But I do have a lot of irons in the fire at the moment. So what that means is that I probably won't be doing as many videos over the next month or two. I'll do them when I have time, and when I've got something interesting that I think is interesting to say, I will still be doing them. But other than that, I don't know what I'm going to be up to really, so I don't want to make any promises. I have been trying to do 2 videos a week for the last few months, and I have been doing that, but you can't promise that going forward. No worries, guys. Good luck for your trading in May. I'll see you soon.